Well, hello, everyone. Good afternoon. Welcome back after the coffee break. I'm Elise Susi, Director of Policy and Regulation at GBBC Digital Finance. After GDF and GBBC merged, we are now the largest industry association for blockchain and digital assets industry. And I have a background both in the private sector at AFME, working with capital markets banks, as well as the FCA, working on policy and regulation. So I'm really excited for this topic today. And I think already we've heard some great discussions about the different regulatory developments around the world and the different stages that those are at. And I thank you to the great introduction as well. We'll try to cover it as best we can. And, I think, though, that one other element, a lot of times these panels on regulation and policy, they go through all of the latest developments, and we will try to touch on those. But also, I'm joined here by a fantastic industry panel today, and we're going to cover the impact that the regulation is having on businesses and, the very real, challenges that they're facing as well. So I'll turn to our panel to let them introduce themselves. Suzanne, you first.
Suzanne Hubble. I'm the COO at Kamenu, the custodian built by institutions for institutions. We were laughing about my bio being a bit boring, so I'm now selling myself as a market infrastructure junkie. I love market infrastructure, which is what I came in for, and this industry, struggles a little bit on that. So I think, we'll bring some of that. I've got too many years' experience in TradFi, fixing those sorts of problems, and I've been with Kamenu now for over 2 years.
Hi, everyone. My name is Jeff Hancock. I'm co-founder and CEO of CoinPass.com. We've been in the crypto space over 5 years now. It's just been our 5th birthday last week. We were bought out of the bear market in 2018, taking care of retail accounts, moving into corporates, institutions, and all the way up to SaaS pension funds we help look after today. While we've been in the market 5 years, it's obviously been an adventurous ride. We came into the space when regulation was zero. The FCA thought Bitcoin, crypto, and blockchain were all the same thing. We were the second to apply for a license in 21. We were the third to actually attain a license in the UK as a full crypto firm. And then up until today, we've also just been acquired by Awanda Global Corporation. So a lot of exciting things coming up over the next 5 years we're really looking forward to. And obviously regulation is a big part of that.
Fantastic. Bob.
Hi, I'm Bob Williams. I work for a company called Locked-In. We are one of the largest insurance brokers in the world, and I have the pleasure of working in a team for our Locked-In Emerging Asset Protection. We advise and support all elements of the digital asset ecosystem, from the native players who sit there and are building out the future infrastructure to the TradFis who come in. And my job over the past 5 years has been watching sort of these businesses try to get the coverage they need so they can engage with TradFi and the fall down, but with regulation, that's hoping to change.
Great. So just to sort of set the scene today, and I know we've discussed it a little bit in some of the other panels, but Jeff, could you talk about what you feel are the regulatory frameworks that are having the biggest impact on industry right now?
Well, the biggest ones that are having an impact is basically any that don't have is a lack of clarity, where you're not getting a fully formed framework. You're getting kind of a vague understanding, and then you have to go and execute it yourself. I like to call it kind of the regulation minefield. The mines are out there. They won't exactly tell you what you are, and you have to feel your way through various frameworks or various versions of frameworks to kind of get to the goal. And even then, it's very hard to be 100% compliant. If we look at the most recent one with the FCA, which they are doing a reasonably good job, but there is still a lot of vagueness there. From let's look at the financial promotion one, for example. That's to not misappropriate or measure appropriateness of a product for a particular user, whether they're professional, retail, corporate, it doesn't really matter. But what is a risk warning? What does it have to contain? There's no real guidelines for what specific wording they want. It might be down to a font size, where it's located, and stuff like that. So there's a lot of lack of clarity around what's exactly required to move forward. And my fear is that what we're trying to protect on now, the regulations that are trying to do stuff for crypto, is going to be too slow and too arduous. And then what's going to happen is we're going to get the next wave of either digital assets or bonds, property, wherever it's going to be, and we're going to be back to square one straight away. So we either need to be more forward thinking in how we actually approach it to try and deal with today's problems. But I think that lack of clarity is going to make tomorrow's problems even harder.
So actually what you're seeing is that instead of it's the regulatory frameworks that are having the impact. It's where there's a lack of framework that's actually having a huge impact on the
Yeah.
industry.
And I think it's no one really wants to move first, because if you move first, you can get it wrong. It opens up, potentially to an FTX 2.0, which is what everyone wants to avoid, and no one wants to be responsible for it.
Exactly. And you did mention FinProms, though, now that the Financial Services and Markets Act has passed, that does give the FCA the powers to move more quickly. So hopefully we'll see some greater clarity here in the UK.
Hopefully, yeah. That's the goal. And I think even as not annoying, as arduous as it is to put these kind of policies in place, I think it also gives exchanges like ours powers to actually promote better products for our users as well. Because there are people that are on board that want to get involved, and they either don't have the education or the skill set, or they've been misinformed by other people on go and trade this and move this asset here, there, and everywhere. And otherwise they just don't know what they're doing. So we don't want to cut people off, because crypto is for everybody, but being able to put the right content in front of people, because they might not be appropriate for trading or for wallets or for DeFi or whatever. You get a chance to educate them and help them, rather than them fall down a rabbit hole and lose a lot of funds. So I think there's positivities on both sides.
Definitely. And I think the education piece is really important. Suzanne, Jeff has mentioned a couple of challenges. What do you see as the challenges for your business over the next few years?
So just checking this. Yeah, we're better now. So look, I think I focus very much on the practical implementation of this. And the problem is, we're, particularly in this industry, it's global 24/7. Your business runs globally, the regulation runs locally, different implementations, different implementation timelines, let alone different approaches and lack of clarity. So how do you handle that when, we're seeing at least 3 different approaches across the regulators? You've got the regulators that are saying roughly same risk, same regulation, like the FCA. You've got regulators in the MiCA program, where they're looking at much more, how do we put something standalone in that's fit for purpose around these digital assets? And then you've got jurisdictions like Dubai and VARA, where they're actually setting up a whole new regulator. So, the evolution of those across, the thought processes, where they are in terms of how they're thinking about this, makes it a real minefield in terms of how you actually put a solution together that works for your clients across jurisdiction. So, I think that kind of harmonization, which I think we'll talk about a little bit more, but, even further than that, where are the recognition regimes? If I'm regulated by one high-class regulator, is that recognized by anyone else or not? There's very well-established regimes for that in other asset classes, but we're just not seeing that yet. So I think the kind of the globalization piece and how you support a global business is really key.
It's also the activity as well, because not every activity in digital assets is exactly the same. You might be holding something on Treasury, you might be trading, you might be doing payments, providing non-custodial services. How do you regulate the entire space when there's so many activities that are technically under the same perimeter?
And don't get me started on definitions of each one of those.
Well, we've got 31 minutes. Go for it.
We could go through a few. Now, you mentioned MiCA. So, Bob, with MiCA emerging as this cornerstone for the EU's approach, how are you seeing, when you speak to your clients, the different interpretation and implementation developing? And how does that compare to the UK, which we were talking about earlier?
What we find really interesting with MiCA is, believe it or not, it's actually the interpretation of how to implement it by different countries. Because you've got to remember, not everyone of the 27 is starting at the same starting point. You've got countries like France, Luxembourg, Malta, even Cyprus, who have been trying in isolation to create their own regimes prior to MiCA coming in. Now what's happening is they're having to retrofit. So sometimes that's for the best. You have really good advancements we're seeing, especially out of France. But you also have these other issues where all the other countries who maybe weren't wanting to specialize in this now are being forced to. And so that's going to have impact on where people are regulated, and potentially, and I looked at this again from a TradFi position looking inwards, is why are people choosing certain regulation? Are we going to get a differentiator in EU regulation across the board? Because when you look at MiCA, whilst it is very EU based and these are our rules and you will follow them, there is still enough of interpretation to allow member states flexibility to pivot and adjust. And are we going to start seeing crypto hubs appear? When you look at it compared to sort of, say, the UK approach, which has always been principles-based and slower to act, I echo your thoughts. The concern I have is how are we going to have recognition across? how are we going to make sure that we don't have to have someone having 3 lots of licensing across the world in all these different jurisdictions and whole compliance teams and adjustments and local websites, and how we're going to get around that and what's the implications that are going to go with it. And you want regulation to support you, not burden you. It's there to help legitimize, not add a layer of complexity just for the sake of it.
I just want to pick up on that because I think there's another interesting point there, and I dread to use the dirty words regulatory arbitrage, but as you sit here and look at the different jurisdictions and you're running a business, do you set your standards to the best regulator you face, or do you kind of commercially choose to do maybe in line with a lower standard in another jurisdiction? How do you, what does that mean for your internal risk management? How do you think about those challenges? And I think without that lack of a recognition regime, you are going to see people playing those differences, and that will lead to problems.
And I think
we saw that in the UK when the regime came in with the FCA. There was a huge list, like 240, maybe 300 companies. Very low subset got through. And even to this year, there's been 75 applications and only 2 of them getting through. So people are looking at, well, I can't face this regulator. It's too hard. It's too laborious. I'm not getting the answers. We were one of the lucky ones. We did our license. We had the same case officer for 18 months. Some other companies that got through had 5 or 6 case officers. So imagine doing the same application 5 times. And it was easier and more commercially viable to face someone in Estonia or Lithuania or Latvia or France. Everyone that couldn't get a license here moved somewhere else that was more commercially viable. So it becomes a commercial prospect instead of a compliance prospect.
And I think also picking up on the MiCA point in the different EU jurisdictions is it's very hard to actually know what the final product of MiCA will look like until we get the level 2 measures. So we're about to have a second package of regulatory technical standards this October. There'll be a third package as well. But until those are set out, and then until those are implemented across each jurisdiction, there's still going to be those, discrepancies because the level 1 is quite high level. So I think that's interesting as well. And all of you have mentioned the importance of global harmonization and interoperability. So I think let's come back to that point. Suzanne, what do you think are the most important elements to focus on right now to harmonize globally?
Look, I think we've touched on some of it, but let's pick up on the travel rule. So, something that starts from the best starting point. There's single global guidance from FATF in terms of what they expect from the travel rule. What are we seeing? Absolute bloody chaos, right? Because it's been implemented differently in different jurisdictions. There's, sunrise issues all over the shop. Different, some regulators are giving you some kind of phase-in time, others are not. Some are providing guidance, some are not. There is no industry utility, which is what you see in TradFi, that allows you to, coalesce around a single solution. So let's layer on technical interoperability within that. Commercial aspects, do I connect to 5 platforms so I can make sure I cover it, or do I run a bit of risk and have a sensible conversation with my regulator? So even the regulation with the best start point in the world can actually lead to an implementation mess. So I think, those are the kind of things, it's just that actually, are we implementing these things and rolling them out in a way that actually allows the industry to adhere in sensible timeframes, or does it just cause more noise and people actually start ignoring it?
So travel rule, Bob.
So was it chaos or was it clean, in your opinion? I think it's.
I'll reserve that one.
As 50-50. Well, the other bit we talked about, the implementation part. The chaos was you go with one provider, you have coverage over XYZ exchanges. You go with provider B, you're covering A, B, C, D. When we made our decision, there was a bit of commercial there, but we looked at our analytics and see how many of our customers are sending crypto to other exchanges. And we basically made our informed decision over, these are our counterparties, whether we're not trading with them, but our users are. We're going to choose to cover these 9 out of the 15 or whatever. And that's how we made our best informed decision to go with our FATF provider. But there's going to be some that come outside of the perimeter. So really, are we still compliant or are we kind of compliant?
And that's it. You're making a sensible risk-based analytical decision.
Thank you.
Beautiful. It's a very, very clean decision. But it still doesn't mean you're 100% compliant.
No, exactly. Well, I think it's impossible to be with,
Current, yeah.
unless all the offering providers start doing reconciliations between each other, which I don't think is going to happen.
I
Bob?
think living off the back of that, though, is that as long as we have global regulation that's focused on principle-based, so where we have regulators who come in and look at the intent of what you're trying to do, there should be room for businesses to make mistakes. You cannot remove risk out of your business completely, but if you've got the right intent and you're doing the right processes, and so far, there's been also three major countries who are really trying to push for this: the UK, the EU, and say the Dubai regulator. They're all trying to come in with principles-based. What is your intent as companies? Are you trying to be legitimate stand-up companies that we can be proud of, or are you trying to be those who shall not be named who have now gone under? Which side of that divide do you sit on? And as long as we keep our regulatory and we push for that from an industry perspective, that we want principle-based, we want to be focused on what is the intent behind everything, so that, say you make a mistake and there's some counterparty risk you couldn't take into consideration. But did you try? Did you do the analytics? And you can make a statement. The regulator, hopefully, should be one of those regulators that goes, well, I'll do an investigation. I see you've tried. Here's some recommendations of maybe how you can improve, and let's all move on forward together. And that's hopefully, I'm a very optimistic person, what we're going to see moving forward.
And I think also the sandboxes are hopefully that you see, around the world are also a way, as you say, to sort of test it out in a safe environment, and also for firms to start interacting with regulators, learn what that looks like, go on the compliance journey. And I think it's really important, for firms to take advantage of that as well. So we have talked about a lot of challenges, but I want to be positive as well. So, looking forward, there's a lot of regulatory developments coming for 2024. What are your guys' tips for how businesses can prepare for that regulatory change and address some of the things that we've spoken about? So, Jeff, I'll start with you, since you were, good example that Suzanne pointed out earlier. Yeah, very
There you
clean.
go. I think it comes down to team and product. What do you want to build? Who are you building it for? And getting your compliance and regulatory teams in nice and early. What's coming down the line? I mean, my compliance team kind of does all the news forecasting for me on that kind of stuff. But I think for the FCA, we're pretty much covered. We're the FATF now, which is the travel rule, which has already been implemented. We had the FinProm rule that's coming up in October, and some of it being pushed out till January. But we've already been prepared and ready for that to launch. We've built all our appropriateness testing. We put in all the risk. We're kind of ready to launch it. And obviously the data we get from that will help us build more robust policies in the background. So I think what comes next, I can see a horizon maybe a year and a half away, where there might be a variation of permission where crypto can be regulated. But I think that's going to be on the back of a wave of other digital assets wanting to come into play. So maybe crypto 5-10 years from now is the frothy part at the shore, when digital assets, the bigger wave comes in, but I think we're still a long way off. So I think we see ourselves more in the UK than Europe, so that's where our focus is going to be.
Okay, so choosing the appropriate jurisdiction, preparedness,
And product, and what you actually, you can't build something for everybody. I think you need to be really bespoke on what you want to build and who it's for, and then choose a regulatory approach after that.
Makes sense. Bob, what would you say?
I would say learn from those who have gone forward and done it well, knowing what they've done. Exactly, echo everything Jeff said there. Know who your regulator is going to be, figure out what their approach is going to be, and then just remember that as someone who comes from TradFi and works in this space, we're a slower people. We're not as smart. So patience is going to be your number one virtue. All those who I've seen succeed with regulatory positions in place and going through is because they've held the patience, the timings. Yes, when you're with the FCA, you've maybe gone through 6 or 7 case managers. It's exhausting, but that process, because if you've got your product together, you've done your research, you've hired the right people, you've got your team set up, it will come. TradFi is just, we still like to do paper. That's what we do. So patience.
I think that patience point is really important. And also, there's a lot of conversations about tokenization, about TradFi entering into the digital assets industry, partnerships with a lot of these, major cross-border banks. And I think that, slowness and patience is important there too, to build, a cohesive ecosystem where the different market players are speaking to one another, showing they're meeting the appropriate risk tolerances. I think those are really crucial elements you mentioned. Suzanne, what would you add?
Look, I think you have to just recognize that regulation is an inevitability, and you just build it in. So, there isn't clarity on certain things, but you can take a good stab at it. So we look at ourselves, yes, we're a digital company, but we've got a lot of grey hair, and unfortunately more on me than others. But we've done that because we've brought in people that just understand regulation and just believe it's just an inherent part of the business. So we've built from bottom up, and we're ready, and it's very easy for us to adhere because we just know that that's how we want our business to run. So I think it is. I really echo the point about being focused. Don't bite off more than you can chew. Really understand your niche. Really understand who you're offering to, what they need, and therefore what regulation will apply to you. But excuse me, sorry. But within that, it's just talk to the regulators, talk to the industry associations. Have that dialogue, help move that conversation forward, help bring the clarity that you seek in terms of what you want to come. But choose your partners. Choose other companies to work with that have the same approach to compliance and risk that you do. It's always, you can very much tell when you talk to companies across the industry who's come out of a tech background, who's come out of a TradFi background. Depending on what you want to do, you want to pick the right partner for the right activity. If you're looking at regulation, you probably want to lean towards the TradFi guys because it's in their bones and blood. We've all been through it. We understand it. So I think that just really just understand how it will impact your business and make sure you're ready structurally to be able to be compliant.
I'd echo with that, and also being part of the conversation. I know both of you have been very vocal within the feedback system the FCA came out with, and they've asked for feedback on ideas. I know many people in this room and at this event have been. So keep that up. The one thing across, if we, again, these principle-based regulations, and I know from the feedback from MiCA, the FCA, and Dubai, they've all come out and said, we want participation. Feedback to us, because realistically, they're actually being quite open and honest that we, as an industry group, can help design and build our own regulation, which is quite exciting.
I think on that same point is, not being afraid to, I suppose, wanting to educate the regulator as well. There's always an assumption is that, well, they're creating the framework, they're the regulator, they know more than us. And a lot of the time, they simply don't. You can't know everything about everything. And I think even during our own process, we got to educate the FCA on how XRP worked, because they were looking at what tokens do you support, who are your counterparties, where's your custody, explain this transaction. I said, well, it's not mine. I can tell you that, and this is how it works. So a lot of the time they're working with either outdated data or don't have the right education for looking at all of the things that is in our ecosystem. And so by working with them and collaborating and educating, this is how we do it. This is how the tech stack actually works. And here's how we're trying to build something compliant. They're actually very open to that kind of stuff. They're not someone to be feared on. They're someone that you can work with for mutual benefit.
Yeah, and I want to pick up on that point a little bit more because we've talked about, the lack of the clear frameworks, the frameworks that are existing and what those can do. But what about the things that don't fit so neatly into building on top of existing frameworks? And how can we think about approaching that education piece? I don't know, Suzanne, do you have any thoughts on that?
Yeah, I mean, say it is help the regulators do that. So staking is a really great example of this. So it's one of those things that exists with digital assets. There isn't really something you can look across into other traditional assets and say that that's a good proxy for what you're doing. And also it's made muddier in the industry by a swathe of products being called staking, back to definitions, that aren't. They're yield farming, they're rehypothecation, they're all sorts of dodgy, toxic kind of nastiness underneath called staking. So, if you pare it back, there's a very sane, sensible, necessary part of the infrastructure that clients, individuals should be able to participate in, but they need to participate in it in a safe, coherent, very clear manner. So, working again with the regulators to explain how are we looking at staking? What does our service like? What are all the layers? How do we create those disclosures? How do we create that clarity for clients? How do we think this is, you can provide a very safe service on this type of thing for the regulators and working with them. And, particularly with VARA, we've had, great progress in having those sorts of conversations about something, to allow them to say, actually, yes, we see this as necessary. We now see how we can regulate this so we can, allow this activity in the market, because it will happen. Those clients and individuals will find a way to do it. And, if the regulators can bring it in onshore safely, that's for the benefit of all. So I think those regular and technical dialogue with the regulators, I think, really helps on those topics.
I think as well, if you can show how the product works, this is how the yield works, this is how that it comes in, this is how staking works, this is how it's not a black box, this is how it's not hypothecated. It just builds a stronger case. Feel like you're trying to bring it more onshore, which is, I think, something the UK has kind of suffered from a little bit. A lot of stuff going offshore to continue to operate.
Yeah, and I think it's, as you said, building that trust, not saying you need to trust in this blindly, but actually going down to the technical explanation, having that open dialogue. It's really crucial. And Bob, I saw you nodding along. Do you have anything you'd add to that?
It's 100% that thing, because you've got to remember a lot of these people are coming from a standing position that's probably 5 years out of date for the rest of us in this room. So they're educating that piece so we can stay innovative. Like, I've got a bias here. I live in this country. I want it to succeed. So it's that pushing that forward and not being afraid so we can get these definitions done, because I know we can debate about this until we're blue in the face, but they are important, because in the TradFi world, we have these definitions. In so many other sectors, we have these rules, the subtle nuances that if you do this, you have to pivot this way. And I'm an optimistic person. We're at that point where we should be driving that forward and be unafraid to. And hopefully with regulators, they're unafraid to.
Absolutely. Okay, so one more big question for all of you guys. If you had a regulatory wish list for 2024, things that you want to see happen in 2024 in terms of policy, regulation, legislative developments anywhere in the world, what would be on it? Suzanne, can I start with you? Sorry.
Such a long list.
You can do all the definitions if you want to.
Well, I'm going to start with definitions, surprising no one. Look, I think, we're a custodian. We're very clean, simple, we keep it boring, we do custody. But there is no definition of custody. Not all custodians are equal, not all custody services are equal. And, I think recent markets brought a lot of focus to that. But, in other assets, it's absolutely clear. If you're a custodian, you do certain things. Customers know exactly what they're getting. Let alone get into, is it a security, is it not, et cetera, et cetera. So I think just the more clarity on definitions and standards, I think, that's absolutely key for people to really understand the risks they're taking. I'd also say disclosures. There's multiple forms of that, but really what product are you getting? How does the product work? What are the risks in that product? What's the reporting you can expect that goes with that, so you understand how is it performing? Are my assets there? Very basic stuff that you take for granted in other assets, but we don't see, across all of the digital. And probably a personal one for us, but staking clarity in the UK would be lovely.
All right, Jeff?
Might be echoing that a little bit more, maybe a little bit bigger, is having every department that has anything to do with crypto singing the same song and on the same page. House of Lords, they love crypto. House of Commons, constituency-based, they're starting to get there a little bit. HMRC actually doing some decent stuff on crypto tax, and this is capital, this is in staking, this is income. Inside this vehicle, there's tax effectiveness, etc. The FCA and everyone kind of getting on the same page. I'm not sure about Rishi and the crypto SAR thing. One person responsible for everything is a bit very not decentralized, but I think having all of those major departments on a single clarified page, everyone's singing the same song, moving towards one central goal. They've all got independent goals, which aren't really mutually exclusive. I think they're all for the betterment of their each individual policy regime. But to move the UK forward as a crypto hub, it should be DLT hub or digital asset hub, just needs a bit of a rebrand. So I think a rebrand and collaboration across all those departments to sing one song would be my wish list. That might be like a 5-year wish list, not just 24, but we can think big.
10-year wish list, all the global crypto.
No, just the UK. No, I'll be biased like Bob. Just the UK, make UK awesome, and everyone else can. Well, mate, what if everyone wanted to come back to the UK?
Okay. Bob?
I'm going to echo everything you have just said, and I'm going to be a little bit more empathetic towards the regulators here. I want them to have bigger budgets so that they can hire more people, so we don't have 6 or 7 case managers for every application. I want them to be able to have one. I want them to be doing it effectively and efficiently. I would love them to have a bigger budget so they can do that. They can hire more people, more technicians, so we can have that mixture of policymakers, people who understand things, especially if we're going to be moving at speed and we're going to be growing this out. And again, selfishly, I hope it's the FCA who buys this first. But we can, as an industry, move forward, and we can keep having all these things. They have this mixture of talent pools. And echoing your position there, imagine if we could have them doing roundtables amongst themselves, where HMRC sits there and goes, well, we're trying to pivot this way, and FCA goes, oh, cool, this is how that would work for us, but they need the resources in order to do so. So
Definitely.
I hope that becomes a budgetary reason, that if we want to, and again, not to throw politics, if we want to grow the UK to be this hub, we need to realise the best way to do that is not only to encourage businesses to be here, but to one of the things to support them as a regulatory framework that is there to uplift, not stop and slow.
And I'm just going to add one thing to all of that, which is that I think, all the points, fantastic, but I would add the global piece as well, because I think, the UK, it would be great if it did all of those things, but without the global cooperation, without the harmonization, it's not in a vacuum. So, there has to be that cooperative piece between the different regulators that are taking these approaches. So I think we've heard, some really interesting takeaways from all of you guys today. The innovative approaches that might need to be required for things like staking, definitions. I mean, we could just, keep doing that for the rest of the day, listing all the things we want definitions for, but custody and staking came out really clearly, and disclosures as well. And I think also the challenges that come with these different regulatory approaches around the globe, and the fact that they're not harmonized yet, and even things like the travel rule that are very important, it's still not there yet in terms of the consistent implementation, and MiCA is still progressing and evolving as well. And for that harmonization to occur, that's crucial in mitigating the regulatory risk. So I think that is a bit all we have time for today. So thank you so much, everyone. Thank you for joining, and I hope you enjoyed that session.